In section 6-2, we're going to talk about adjusting entries on a worksheet. So up to this point, we have always debited supplies, meaning we're adding supplies and assets, so we're adding to supplies, and we're always adding to prepaid insurance, those two assets. Well, we're eventually going to use some supplies and unfortunately probably use some of that prepaid insurance amount, so we need to adjust to make sure our balance is as up to date as possible. And then we're going to be able to complete the adjustment columns of a worksheet. So we've talked about prepaid expenses. We have prepaid insurance. So we are paying for an expense in one fiscal period that is not used until a later period. So we pay monthly into prepaid insurance, but we may not use it for a month, 2 months, or even more after. So that's a prepaid expense. It's really important, this is that consistent reporting that we talked about in 6-1. It's really important that we report income and expenses when they occur. So that is called accrual basis of accounting, and that is a GAAP, generally accepted accounting principle requirement, to use accrual basis of accounting. So if we earn money in December and our fiscal period starts over in January, we need to make sure that that income in December gets recorded in December when it occurred, and it gets included on that fiscal year's forms and financial statements. Same thing with expenses. So we need to make sure that our prepaid expenses, like prepaid insurance, are accurate and updated for the fiscal period that we are in. The opposite of accrual basis accounting is called cash basis of accounting. That's probably what you and I use personally in our personal lives when we get cash, when we receive cash, whether from a birthday present or a paycheck. And when we have expenses, we only think about it when we actually use cash. So we don't really care when we got it or when we spent it. However much cash we have in our wallet or in our bank account, that's how much we have. So that's different than accrual basis of accounting, where you might have sold something and you had accounts receivable. You gave someone 30 days to pay you. You still record that sale when it happened. For cash basis of accounting, like you and I use personally, if someone owes us money, we don't really think of it as our money until they actually give us the cash or Venmo us or whatever it may be. So that's the difference between accrual basis of accounting, where we have accounts payable, accounts receivable, and cash basis of accounting, where you don't think anything of it until you actually have the cash. So because we use accrual basis of accounting, we need to make some adjustments to make sure that the accounts at the end of the fiscal period are as up to date as possible. So we're going to talk about how to do adjustments now. So at the beginning of January, we had $620 of supplies. So someone went through and at the end of January counted up all the papers, pencils, and pens that we had, and we actually only had $90 in there at the end of the month. So we can assume, think of this in real life terms, if we started with 620, at the end of the month we only had 90, then we used $530 worth of supplies in January. So we need to make an adjustment so that at the end of the month, the amount of supplies that we have on our records is accurate. We can't show that we have $620 of supplies when we actually only have $90. So we need to make an adjustment. So step one of the adjustment is we're going to write the debit amount. So we are going to debit supplies expense for that $530 worth of supplies that we've used in January. We always debit expenses, so we're debiting supplies expense for the first time. Then how do we decrease a debit of 620? We decrease it by a credit of 530. So that is our two adjustments. You'll notice that we have these tiny little A's here to show that these two numbers go together. They're for the same adjustment. So we're increasing supplies expense with a debit. We're decreasing supplies with a credit. So that is our adjustment for supplies, to make sure that our balance for supplies shows how much we truly have in our supply closet. So before the adjustment, we didn't have anything in supplies expense because we didn't use anything yet. But we had $620 in supplies, and that is changed. So we did our adjustment, and that number is now changed. So now we have $530 debit to supplies expense. We credited supplies for $530, the amount of supplies that we used. So now our new balance for supplies is accurate. It's the $90 worth of supplies that we actually have. We're going to go through the same exact process for prepaid insurance. So at the beginning of the month, we had $900. Over the course of a month or a few months, we put money into prepaid insurance. So January 1st, we had $900 sitting in that rainy day account for when we needed to use it. At the end of the month, on January 31st, we only had $750 in there. So unfortunately, we had to use some of that money to maybe pay a deductible or pay a premium to our insurance company. So if we started with $900 and we ended with $750, we must have used $150 of insurance in the month of January. So we need to update our prepaid insurance balance because it's not $900 anymore. So we need to do an adjustment. Starting with a debit to insurance expense to show the $150 debit increase to insurance expense. Then we need to decrease our debit of $900 with a credit of $150. So that's the second step. Third step is we label them as B so that we know that the B adjustments go together. Those two numbers are for the same adjustment. So now our balances, before the adjustment, we had nothing in insurance expense. We didn't show that we had had any expense, but we had $900 sitting in our prepaid insurance account. Well, at the end of the month, we only had $750. So we needed to adjust. We used $150 of insurance expense, so we're going to debit insurance expense for $150, credit prepaid insurance so that we lower our balance to accurately show that we only have $700 in prepaid insurance. So just like we did for our trial balance, we need to make sure that our totals for the two adjustment columns, debits and credits, equal. So 3 steps, very simple. Step 1, we're going to draw that single underline. We're showing we're going to add everything above it. Step 2, we'll add up our totals, put our totals in there. Step 3, hopefully they match. And then we could put our double underline to show that those two columns match. Our trial balance column and our adjustment columns should equal. Debits should equal credits. And that is section 6-2. There are 2 more questions at the bottom of your reading guide that you should answer, and then watch the following 2 slides to make sure that you have the correct answers.